Hello, everybody. Adam Bergman here, tax attorney and founder of IRA Financial. In today's video, I am going to dissect and explain and teach you everything you need to know about the Self-Directed IRA LLC and the Self-Directed Roth IRA LLC. Any differences, distinctions, same rules, same contribution rules, distribution rules, investment rules. Watch and find out. So just going to be about a 30-minute presentation. I'm going to review again what is a self-directed IRA, talk about the LLC, the popularity, the legality of it, the foundation behind using an LLC, a special purpose vehicle to make investments, and talk about the Roth, the rules involved in using an IRA or a Roth to invest in the LLC, the framework, and then ultimately we'll get to some of the prohibited transaction rules, UBIT, some strategies you can employ when using an IRA LLC. So I'm one of the first, about 14 years ago, it's one of the first companies that started working with the checkbook control self-directed IRA LLC. In fact, there are a number of companies still in the space today that are stubborn and won't work with a checkbook control LLC. A number of my competitors that I respect enormously, just they don't want to work with it. And I guess there's a couple of reasons why. Mostly, I think it surrounds the fact that they want to have more control. So when you have an LLC, right, which I'll get to a description in a minute, obviously the investments are happening at the LLC level versus the IRA level, meaning the custodian's less involved, which generally means you're going to pay less fees. And that's sometimes a no-no to some custodians. So I'm a firm believer of freedom, doing everything you can within the confines of the tax code and the law to gain control and freedom and make investments the way you want to, the way you see fit, and the most cost-effective way. And I think that's been really the central focus of my plan designs for clients, and why I've really worked closely with the Self-Directed IRA LLC, also known as checkbook control, the Self-Directed Roth IRA LLC, the Solo K, and the Self-Directed IRA Trust. In all cases, the trustee or the manager of the IRA LLC would have checkbook control, which I will explain shortly. So what is a Self-Directed IRA? And I've done a lot of videos over the years, podcasts, blogs about this. So if this is repetition, I'm sorry. I will keep it as short as possible. But a self-directed IRA is essentially an IRA, which was created in 1974 by ERISA, that is able to invest in alternative asset investments. Essentially, investments that are not publicly traded. So not stocks, not ETFs, not mutual funds, not fixed income, bonds. Essentially, non-publicly traded securities. Again, real estate, gold, private equity, hedge fund, private businesses, venture capital, mortgage notes, hard money loans, credit funds, cryptos, anything that's not publicly traded, although cryptos could be, publicly traded. There is no distinction in the tax code between an IRA that invests in stocks and an IRA that invests in real estate. The word self-directed IRA, it's not found in the tax code. So you can call it whatever you want. You can call it an IRA Financial IRA, an Adam IRA, a Freedom IRA, whatever you want, go for it. It just means that you're going to work with a custodian like IRA Financial that will let you and your IRA invest in non-publicly traded assets, okay? So you may be asking, well, why on earth would the traditional institutions like Fidelity or Schwab, why don't they get into your business, Adam? Aren't you nervous? Well, IRAs were created in 1974, so 50 years ago. The traditional institutions don't want to get involved with alternative assets. They have their business model. They sell products, they give you investment advice, and they make plenty of money selling publicly traded assets and securities. So they don't have the expertise, and they don't want to upset their business model. So that is why they do not allow their clients to invest in non-publicly traded securities or alternative assets. They could. It's in the tax code, right? And we'll get to the prohibited transaction rules in a moment, but essentially there's only 3 things you cannot do with an IRA. That's it. The IRS doesn't list what you can do, only what you cannot do. And the 3 things are as follows. You cannot buy life insurance with an IRA. You could, with a 401k. Cannot buy collectibles like art. There's an exemption for prohibited transaction for precious metals, gold, palladium, silver, or American Eagle state minted bullion coins. They must be held in the physical possession of a U.S. depository, a trust company that cannot be held personally, but they are not collectibles, so you can buy them in a retirement account. And thirdly, under Internal Revenue Code Section 4975, you can invest in any transaction that directly or indirectly personally benefits you as the IRA owner or any disqualified person, any of your lineal descendants, your parents, your children, your spouse, daughter-in-law, son-in-law, or any entities controlled by such persons. Otherwise, you can do it. Okay, so there's no reason you can't buy real estate in an IRA. The only difference is Fidelity won't let you do it. That's why the self-directed IRA market was born in 1974. The same year IRAs were created, traditional institutions started selling IRAs or providing IRAs the ability to buy stocks with their retirement money. They could have easily said, hey, we'll let you buy real estate or gold too. They chose not to because that's not in their business model. So the self-directed IRA model was born. In fact, I know I work with someone whose father was the father, really, of the self-directed IRA. And he used a bank. He wrote to the IRS, literally writing with a letter and said, hey, can I serve as a trustee for people's IRA so they can buy gold? And he really was focused on gold. And he literally kept the gold in the depository. And he had an Excel, not even an Excel sheet, right? Just a piece of paper that kept track of Adam's IRA, John's, Joe's. And he did all the reporting by hand with the IRS. His name is Nat Weaver. And, it's very cool, right? I actually work with his daughter, very small world. So it was born, and he started this in the late 70s. So he actually took him a few years to get to the IRS and for them to actually acknowledge that, that's fine. You can do that, and we're okay with you administering it. And he was the father of the self-directed IRA, and now it's obviously the IRA marketplace is $13 trillion. The total retirement marketplace is $33 trillion. And the alternative asset market is anywhere from like 5 to 10%. No one really knows, but it's growing. I can tell you, when I started this company 14 years ago, people thought I was crazy to let clients use an IRA to buy real estate. Right now, it's, of course, you want to diversify. A lot of people have most of their savings in real estate. It's not something that's so alternative and grungy and crazy like someone with, purple hair or anything. It's like, no, it's pretty mainstream, right? Oh, you want to invest in a hedge fund or private business with your IRA? Oh, that makes sense. That's smart. 14, 15 years ago, not as many people were interested. So an IRA, okay. IRAs were created in 1974. Roth IRAs were created in 1997 by Senator Roth. Let me just go through the IRA benefits. Your money grows without tax once in the IRA. You put in money in the IRA, you can put in $7,000 or $8,000 if you're over 50. You need to have income to make an IRA contribution. And if you have too much income, if you're married, filed jointly, and one of you or your spouse has access to a 401k, you have to be below a certain income threshold to make tax-deductible contributions to an IRA. You can do after tax, but in order to get that additional deduction, you have to be below an income threshold. But for purposes of today's video, just know an IRA, you get a deduction. When you pull out the money after 59.5, you pay tax, but the money grows within the IRA tax-free. That's known as deferral. If you pull the money out prematurely before the age of 59.5, you pay tax and a 10% penalty. The whole idea of a self-directed IRA is you can invest in what you know, what you trust, you can diversify, hedge against inflation. And as long as you don't do life insurance collectible or prohibited transactions involving a disqualified person, you can do it, which is awesome. And why I love what I do is because you get to solve puzzles all day and help people kind of do the investments they want in the most tax efficient way. So any IRA can do a self-directed IRA, even health savings accounts or Coverdales, IRAs, Roths, SEP, Simples. It's the same thing. It's the same rules. Whatever the rules are for a traditional IRA or a Roth IRA or a SEP IRA or simple IRA, just because you're buying real estate, it's the same rules, same contribution rule limitations, same distribution rules, same RMD rules, same everything. The only difference is this. With a self-directed IRA, you can invest in more things. You don't just have to buy publicly traded securities. The tax code lets you do it. Now, it's your right to say, hey, I just want to buy stocks, or I just want to put the money in a cash account. It's your money. Thankfully, we still live in a free world, and the government tells you what you can, it doesn't tell you what you can and cannot do. You can still do it other than those three things, okay? So the rules are very simple. As I mentioned, you get a pre-tax deduction, deferral. You pay tax if you're over 59.5 when you pull the money out. Before 59.5, tax 10% penalty. When you hit 73, you have to take a required minimum distribution. Three types of self-directed IRAs. And I've done previous live on this a couple weeks ago. This presentation is really, I want to distinguish between the IRA and the Roth. That's really the core of this presentation. And I want to do it in the context of the checkbook control. So I'm not going to focus as much on the full service self-directed IRA because I've done a lot of videos and a lot of content on that. But just for a quick summary, the full service self-directed IRA is the most popular. It's the plain vanilla self-directed IRA. You open an account with IRA Financial, you roll over your money tax-free from your IRA or 401k, former employer, and then the IRA custodian makes the investment into the real estate or the hedge fund or the private equity fund or to the private business. Title would be in the name of IRA Financial Trust Company for the benefit of the Adam Bergman IRA, right? And that's your plain vanilla IRA. And we'll see in a minute why the LLC and the diagram and flow chart of how it differs from a regular full service. And then you have the LLC, which I'm going to talk about at length in this video. Same with the Roth IRA LLC, also known as the checkbook control. Okay, and I talked about full service. I'm going to skip this for a bit. You can do an IRA or a Roth IRA full service. The only distinction, again, is one's a pre-tax IRA, one's a Roth IRA. The same rules as they pertain to a traditional IRA that's not self-directed will apply to a self-directed pre-tax IRA. Same distribution, same contribution, same RMD. Same goes for a Roth IRA, where if the Roth IRA is buying stock or real estate, the same contribution rules, distribution rules, and there's no RMD rules. So same rules, framework apply, whether it's a traditional investment or alternative. So let's talk about this. Well, actually, let me do this. I want to bring up the diagram. I think it's the best way to understand what we're talking about here. And for purposes of today, when I say self-directed IRA, I just didn't want to have two similar flowcharts. Just you can replace IRA with Roth when I discuss the Roth. Okay. So this is, in essence, the checkbook control structure. This is how it works. Okay. Step one, you open an account at IRA Financial or any self-directed IRA custodian, but hopefully you choose IRA Financial. Step two, right? It takes about a day to open the account. We do a KYC. We're a regulated trust company, so we have to make sure we know who you are. It takes a day, maybe less. Second step is you do the transfer or rollover. How do you fund a self-directed IRA? Well, you have a number of opportunities. You can do a contribution, I mentioned, $7,000 or $8,000 if you are under over 50. You can do a Roth IRA contribution as well. I'll get to those rules in a second. You can also do a transfer from a IRA. Okay, SEP, simple, traditional Roth. You could also do a rollover. A rollover and a transfer are the same. Transfer just means IRA to IRA. Rollover means you're moving it from a non-IRA. So 401k, 403, 457. That's step two. The money goes up here. It's going to sit here. We use Capital One and UBS as our bank, so the money is FDIC insured under 250. Third step is we set up the LLC. Okay, why is the LLC used? Because if we didn't use the LLC, then it would just be a plain vanilla self-directed IRA, right? The IRA would invest directly into the investment. What we're doing here, this is the whole crux of checkbook control right here. The special purpose LLC, okay? That's it. The special purpose LLC does a number of things. Number one, what it does is it creates some separation between the IRA and the investment. But from a tax standpoint, it's invisible. So there's limited liability separation. So the assets outside of this LLC will be protected from limited liability protection. So that's the first thing this LLC is doing. The second thing it's doing is it's flow through. Because an LLC or a limited liability company is a pass-through entity, a single member LLC owned by one person, like an IRA or individual, treated as a disregarded entity for tax purposes, so it tax nothing. An LLC owned by two or more parties, treated as a partnership for tax return, tax purposes, files a Form 1065 return. But from a tax standpoint, it's still ignored. It doesn't pay an entity level tax. So an LLC has one level of tax. It has no corporate formalities, right? The players in the LLC, you have a manager. Okay, instead of a board of directors like a corporation, you generally have a manager or managers. The owners are known as members, and the corporation owners are shareholders. But a corporation, like Apple or Tesla, it's known as an entity that has two levels of tax. There's a corporate level, which would be 21%, and then all the net earnings after tax, whatever's left over, retained earnings, could be dividend back to the shareholder, and that would be subject to ordinary income tax. So that's known as two levels of tax. Now, if the corporation was publicly traded, that qualified dividend would be subject to a reduced tax rate of 15%. But assuming the corporation is private, you're talking two levels of tax, 21% plus state tax, and then a shareholder level tax. The LLC has no federal income tax. Some states, like California, will impose franchise taxes. Some other states have very minimal state tax. Most do not. Well, no, 7 absolutely do not, like Nevada, Delaware, South Dakota, some of the more popular LLC states. But even in the context of an IRA, because the IRA owns the LLC, most states will basically withhold any state taxation on the LLC income because the owner is tax exempt. That's a topic for another day. But you can see what's going on here. Why is this called checkbook control? Because the manager of the LLC is me. So this is old school, right? The IRA LLC has been around for a long time, really since '96. People use checkbooks. There was no Apple Pay, no Venmo, Zelle, barely internet. I think first time I used internet was 1996. Believe it or not, this is a true story. It's a bit of a tangent, but I went to McGill University. It's known as one of the best universities in Canada. And I'll never forget, I was a junior, 1996. I took an internet course. I didn't have internet at home. I didn't know how to send an email. 10% of my grade was sending an email. Hey, this is a college class, no joke. And I had to get my friend we went to a computer lab and he showed me how to do it. I didn't even know what email was. That's 1996. So that's why Self-Directed IRA LLC is called checkbook control. It's stupid, right? We should call it, I'm going to recoin it something. If anyone has any suggestions, let me know. But it should be like something, digital wallet something. But you get the gist. When you have checkbook control or access to your bank account, whether it's through Venmo, Zelle, or just wires, you can do everything. The custodian's not involved, right? I'm involved as manager. So if I'm making an investment to A, B, C, or D, the IRA custodian doesn't even know. They don't know if I'm investing in Toronto, Texas, or Toledo. No idea, right? The only thing the IRA custodian is going to get each year is the value of this. Why? Because they have to file a 5498 with the IRS each year. Okay, that's it. So you have ultimate freedom in checkbook control. You can make investments quickly. You have limited liability protection, right, which protects assets outside of the LLC. Limited liability protection does not protect assets in the LLC, it protects assets outside of the LLC, which is important if you have IRAs in different places. Gives you privacy because the title of the investment is not IRA Financial Trust Company for the benefit of John Doe, it's ABC LLC. So it's much more difficult to find out who owns ABC LLC. You will be able to reduce your fees. Why? Because the custodian's not involved on a day-to-day basis. You are as manager. Now, single member LLCs file no federal income tax return. They're disregarded entities. You do have to file in most states an annual report, pay a minimal fee, generally on average about $100 for the privilege of doing business in that state, which you can do as a manager. But the checkbook control or wire control, whatever you want to call it, means that this special purpose vehicle is separating the IRA and the investment. You're separated, meaning you're getting limited liability protection. You're separated, meaning there's a privacy factor. And you're separated, meaning you have the control over the LLC, not the IRA custodian. But the beauty of this structure is this. The LLC, from a tax standpoint, from an IRS standpoint, is treated as a tax nothing. It's invisible. It's like it doesn't exist from the IRS perspective. So the IRA is making the investment from the IRS's perspective directly into the investment, even though from a corporate perspective, this still exists. But from the IRS perspective, it's treated as an invisible entity, meaning there's flow through and there's no tax. And it's the ultimate strategy. I mean, I love it. I've written 2 books on it. I'm just still shocked that, some of my competitors still fight me on this. They're so stubborn. Some of them won't do it. It's better for me. There's more business. I get to work with smarter people that understand the rules. Now, I mentioned 1996. So 1996, this case came out, Swanson v. Commissioner. It's the first case that said that an IRA owner could own an entity. In that case, it was a DISC. It wasn't an LLC. It was a domestic sales corporation. And in Swanson, this individual shareholder, Mr. Swanson, he had his IRA own the DISC, and he managed the DISC as the manager or president. And the IRS said, no, you can't do that. You can't do that. You can't have your retirement own a company that you manage. And the tax court said, no, IRS, you're wrong. Okay, and then 5 years later, there was a field service advisory opinion, basically the IRS acknowledging that, yes, you can do this. And then it's been tested in multiple cases over the last, 20 or so years. In fact, this is a fact. If you want to get a mortgage from Freddie or Fannie to buy real estate, you have to get an LLC. You have to use an LLC. They won't lend to an IRA. If you want to get a non-recourse loan just from a bank, they will not lend to the IRA. You have to use an LLC. So anyone tells you that the law is not established in an LLC is a flat out liar. They don't know the rules. Ask them where they went to law school, because they're not going to tell you, because they're not lawyers. It is 100% allowed, validated, not just by tax court cases, by even IRS field service opinions. And then there's multiple tax court opinions that talk about IRA LLC related cases, and not once have they ever said, no, that structure's not good. The case would center, let's say, on a prohibited transaction, but certainly the opinion will always give the court the opportunity to say, whoa, yeah, the investment wasn't good, but this structure is invalid. No, they never did that. They always look at the investment. They basically ignore this, which makes sense, right? The manager of the LLC is not taking a fee. It's being used simply as a special purpose vehicle to gain limited liability protection to make the investment. That's it. This is a special purpose vehicle. The IRA owner is not allowed to personally benefit. Remember, under the prohibited transaction rules, which I'll discuss in a moment, all the benefits must be derived by the IRA, none of it by the individual. So all the profits, gains, losses, all flow through to the IRA. The IRA owner should not take a fee for any services, should not paint the house, serve as a real estate agent. You get it, right? They can do under the Treasury regulations what's reasonable and necessary, like paying taxes or obviously hiring a contractor, hiring a real estate agent, hiring a lawyer, but they shouldn't do the actual service that's not reasonable and necessary on their own. Okay, so this is the most important part of this whole presentation. Now, instead of IRA, let's assume it's a Roth IRA. And let's go into Roth IRA benefits, okay? So what's a Roth IRA? And then we'll kind of go back to that diagram and talk about the Roth. So unlike a traditional IRA, a Roth IRA is after tax, meaning no tax deduction. It was created in 1997 by Senator Roth of Delaware to give American savers a different angle to saving. Some Americans said, you know what, the tax deduction is not important enough. So Senator Roth said, hey, let's flip it on its back and let's say, you know what, we don't need a tax deduction, but we're going to give you tax-free growth, tax-free income and gains, so long as you have a qualified distribution. And a qualified distribution means you're 59 and a half and the Roth's been open 5 years. If you do 59 and a half and, it's plus, it's not or, it's and, 59 and a half and 5 years, everything you pull out of the Roth IRA is tax-free. This is the best legal tax shelter out there. Okay, I'm a big Rother. I wrote a book, In God We Trust, in Roth We Prosper. It's not here, it should be. I have everything in Roth. Believe it or not, the government loves Roth, right? Which makes no sense, and I've commented on this in the past. You would think the government would be against a Roth. Why? Because in 20 or 30 years, if everyone's in a Roth, guess what? The government's going to have no tax revenue from taxable distributions. But we know governments only care about getting elected, meaning 4 or 8 years. They don't care about the country in 20 or 30 years. So they actually like the Roth. Why? Because there's no tax deductions for Roth. Traditional IRAs generate tax deductions, which means what? less tax revenue because you're generating more deductions, which reduces tax base. Roths are after tax, no deductions. So they like it. In the future, 20, 30, 40 years down the road, when everyone's pulling out money tax-free and living large, not going to be so great. So Roth IRA has no RMDs. Once you're 59.5, Roth open 5 years, tax-free. One other thing to note, the contributions you make to the Roth, you can pull out tax-free anytime you want. So if I put in $3,000 in my Roth IRA tomorrow, I can pull it out the next day, tax-free. The earnings on the Roth, 59.5 in 5 years. Now, not everyone can do a Roth. If you make more than $240,000 married, filed jointly, or $161,000 single, you can't do a Roth. But there's a workaround called the backdoor Roth IRA, which is simple. And I will do a whole presentation probably next week on Roth, backdoor Roth. You basically just contribute to an after-tax IRA and then convert it to Roth. And I'll go on the details next week. So definitely want to check out that video. It's going to be a lot of fun and very informative. But I'm a Rother. I admit it. All my money's in Roth, whether it's Bitcoin, real estate, stocks, any retirement money's in Roth. It's the smartest way to save. My personal opinion, I'm just a tax lawyer. I'm not here giving people investment advice. But if you think about this, let's say you're in a 25% tax bracket, okay? Or 30% tax bracket. Why not? And you put away $7K in an IRA. That's only going to save you $2,100, right? 30% of $7,000. That's a $2,100 tax benefit. Good. Well, my accountant would be happy if I took it. But my play is this. So I'm 48. I've been doing Roths, I don't know, since I've been working, so for a while, for 20 some years. In fact, in my 401k, I only do Roth, employee deferrals. I believe I'm going to be able to generate a much, much stronger rate of return over the next 10, 20, 30 years. And sheltering all that from tax, all those income and gains from tax, is way more valuable than a $2,000 deduction. My opinion. I think I'm right, but that's up to you guys to decide and talk to your advisors. But that's the play. So the Roth IRA LLC is the same as the checkbook control, right? So let's go back to my diagram. Instead of IRA, just put Roth there. Same thing, right? You do a Roth IRA transfer, or you can do a pre-tax IRA here, convert it to Roth, and I'll do next week backdoor Roth and conversions. Conversion, you pay tax, but you're in Roth. You have to wait another 5-year span to then pull out the converted amount if you're under 59.5. If you're over 59.5, it's 5 years and 59.5 for the earnings, but just you can pull the amount converted if you're over 59.5 anytime you want, so long as you're over 59.5. So what's the strategy? Obviously, the play is this, right? You have the LC. Instead of the IRA, you have a Roth. You hopefully are doing really good investments, and you have to be patient. The whole key of being a Rother is you got to have mucho patience. If you're not a patient person, or you feel like you're probably going to need the money before 59.5 years old, don't do a Roth, because it's like gold liquid here. Why would you give up gold? You shouldn't. You don't want it. Now, yeah, things happen in life. Sometimes you hit a couple speed bumps, and you got to deal with that. We get it, right? We all lived through 2008 and COVID. I get it. But putting that aside, the Roth's gold liquid. So you want to be Roth, I would think, but you have to know yourself. If you don't have patience and you have tendencies to kind of tap into your retirement account, maybe you don't want to do Roth. Maybe grab that deduction. Now, there's something called indirect distribution, meaning once every 12 months, you can pull the money out for 60 days, Roth or traditional. But you got to return that money within 60 days. If you don't, taxable distribution. And if you're under 59.5, 10% penalty. So the play obviously is you hit home runs doing a Roth, whether it's buying Bitcoin at 5,000 and now reaping the benefits, buying founder stock like Peter Thiel in a Roth IRA, not what Mitt Romney did. Mitt Romney, he gets all the cheer for investing in Bain Capital deals with a SEP IRA. But he's actually in a worse situation than most think, because he's not paying capital gains when he pulls the SEP money out. He's got to pay ordinary income tax, right? When he pulls the money out after 59.5, or when he's 73 and has to take a required minimum distribution, Senator Romney's going to have to pay income tax. Mr. Thiel will not. Mr. Bergman will not. And the hundreds of other clients I have that have multi-millions in a Roth IRA will not as well. Now, it was not Mr. Romney's fault. He started this before 97. There was no Roth IRAs in 97, before 97. So he didn't even have that option. And by the time he accumulated all this wealth, he probably, the tax bill would have been too great to do a conversion. So why do you do Roth over an IRA? Why would you do a conversion? Well, you definitely want to wait till next week to find out, but here's a sneak peek. You're young, you have confidence in your investment goals, you're going to hit some home runs, and you're patient, and you believe there's huge upside in your investment portfolio. If those are the cases, Roths make sense. Now, if you're converting, obviously you need to be able to pay the tax on the conversion. Or maybe you have a lot of net operating losses that will eat up some of those gains. But if you can be in a Roth, there's no downside to being in the Roth, right? The only problem with a Roth is if you lose your money, there's no deduction, right? You just lose it. Whether it's an IRA or a Roth, you'd rather lose money in a pre-tax IRA because ultimately that reduces your requirement of distribution. But the Roth is gold. So you want to take chances, but if you miss with a Roth, it's more painful than a traditional IRA because you just lost tax-free money. So that's the give or take, right? No one knows. No one has a crystal ball. No one knows what's going to happen, or even if this investment, which seems sure, if it's going to materialize, right? If we knew, it wouldn't be investing. It would be guaranteed. So just keep that in mind. But this is an important kind of little triangle to keep in mind. Whether you do IRA or Roth, same structure. It goes to IRA Financial, will custody the IRA, administer the IRA. Then it goes into an LLC, ownership, 100% if it's one IRA. If it's multiples, it's based off amount invested. And then that investment goes to the money goes from the LLC to the investment. Titles in the name of the LLC, and all the income and gains will flow through to the LLC, and then ultimately the IRA without tax. So now let's go into a few kind of FAQs, which probably deserve their own video as well. So these are like things to consider if you're doing the LLC. The first thing is, do you need the LLC? And my thing is this: hey, if you want limited liability protection, you want privacy, you're going to do high level, high frequency of transactions, risky transactions, it's worth a couple $100 a year or $100 a year and the one-time setup. It is. The limited liability protection is worth it. Plus the privacy, plus the control. I think it's worth it. Okay. Where should you set up the LLC? Here's a couple things to note. Generally, if you buy real estate and hold it, you're going to want to set up the LLC in that state. Why? Because most states will deem your LLC to be engaged in a trade or business if you own real estate in that state. Now, if you're doing passive investments like hard money loans or investing in a business or investing in a hedge fund, you can technically set up the LLC in any state. It doesn't matter. We have offices in many states, but you can use South Dakota, which has no state tax, $50 annual fee. And we have thousands of clients that have used our South Dakota address, and we don't charge a fee for that as a registered agent. So South Dakota is a great option. We also have an office in Florida, which is another good option, but Florida has a higher annual fee. In both cases, there's no state tax. So in both cases, it's very tax advantageous. But here's another scenario. I have a lot of clients that say, Adam, I want to do Delaware, Wyoming. That's cool. You can do it. But if you're going to then own real estate in Texas, you're going to have 2 filing fees. You're going to set up in Delaware. You're going to have to pay Texas to do business in that state as a foreign LLC. Not a big deal. We'll help you do it. But just note you'll have 2 fees. What happens if you buy real estate in multiple states? Well, technically, you should register that LLC to do business in multiple states. You don't need to set up new LLCs, right? If your LLC is called ABC LLC, set up ABC LLC in Texas, and then if you do buy real estate in Maine, you set up ABC LLC in Maine. What's special about the IRA LLC? This special purpose LLC is special, not just because it's called a special purpose vehicle. Because an IRA is the owner, there's special language in the operating agreement. There's special ways to set up the LLC. You, for example, want it to be manager managed, not member managed. There's a couple other items to remember, especially if you want to get a tax ID number. And the beneficial ownership interest, the BOI report, which started just now in 2024. Every new entity within 90 days has to file the BOI. Now, there is an exemption for trust. So technically, since the IRA owns more than 25%, you don't have to disclose that to Treasury and FinCEN. But they also want to know who has substantial control over that LLC, and that's where we would help you complete the BOI and put your information, since you would be the manager for the LLC. So we will handle that. Don't worry. We handle everything. We do the LLC, the operating agreement, the tax ID number. We set everything up. The only things you need to consider is like the name of the LLC, who's going to manage it, which generally is the IRA owner. We'll help you decide what state you want to form in, because it's basically based off those parameters. If it's real estate, you want to register in that state. If it's not real estate, you got way more flexibility. I talked about this, the 3 things you can't do. The IRS doesn't say what you can do, only what you cannot do. So I don't want to go through that again. The most popular IRA investments, this is probably a 23 list. Real estate, investment funds like real estate, credit funds, hedge funds, private equity, venture capital, private business stock like founder stock. A lot of people they contact us. They want to be the next Peter Thiel, which I love. So they have a startup they're going to own less than 50% of, or just like a growth company. They feel like they can buy the stock cheap. They want to do it in a Roth IRA. Metals, I'd say cryptos and metals now. Cryptos is probably a little bit more popular than metals with the run up in Bitcoin and Ethereum. But these are probably the 5 most popular investments. Whether you're doing the IRA LLC or the Roth LLC, that's your choice. The difference obviously is if you're patient and you make good investments, doing the Roth IRA LLC, 59.5 in 5 years, all tax free. If you're doing a pre-tax IRA, you have to pay tax when you pull it out. Ordinary income tax, not capital gains tax. Okay, this is the last thing I'm going to focus on today. And I'll do a whole video on this, and then I'll get some questions. So listen, I mentioned this. In most cases, when your IRA LLC invests, whether it's in investments that generate passive categories of income, like capital gains, interest, dividends, royalties, rental income, it's generally exempt from tax, right? That's one of the advantages of using an IRA to make an investment, is deferral, right? I mentioned your money in your IRA or Roth IRA grows tax-free. Huge advantage. This is the one exception where a tax could be imposed on your IRA for making the investment. And a UBTI, or unrelated business taxable income, or unrelated business income tax, it's triggered in only 3 instances. That's it. It's not hard. 2 involve leverage. 1, use a non-recourse loan to buy real estate. There's actually an exemption for a 401k. The second, use non-recourse loan to buy stocks, let's say, or whatever, so any asset. Now, when you option trade, that's not deemed leverage. Leverage is you literally get a loan. I put 100K in my portfolio of IRA money, and then I'm getting another loan of 100K. So I have 200K to buy more stock. That's the margin loan. Options, when you're shorting or buying options, that's not deemed margin. It's not deemed UBTI. And then the third and most, I guess, common and most poorly understood is if your IRA or Roth IRA invests in a pass-through entity like an LLC that invests in a business. So again, UBTI applies to IRAs and Roth, SEP simples, even 401ks. The only difference is 401ks are exempted from this. So if you use a non-recourse loan and buy real estate, there's no UBTI tax. A non-recourse loan is a loan you do not personally guarantee. Why? Because 4975C does not allow you to personally guarantee your IRA obligation. So this is the one thing I want to mention. So if your IRA invests in a business, that's a pass-through entity like an LLC. If there's more than $1,000 in net income, you have to pay, your IRA will pay a UBIT tax, which can go up to 37% tax, assuming you have at least $15,000 of income. We file the 990T form for you, so don't worry if you're a client and part of our compliance service, we do that for you. We're probably one of the only custodians in the country that do that. We also, if you have an LLC with multiple IRAs, we'll actually file the 1065 partnership return. So we go above and beyond, and that's part of our annual VIP consultant service. You may say, holy cow, Adam, I'm in deep trouble, right? I own Apple stock. I never filed UBIT. What the hell? Am I going to jail? No. Every publicly traded company, 99.99%, including REITs, are not pass-through entities. They're not LLC. They're treated as corps. Even a REIT, a trust, is considered a corporation for UBIT purposes. So this is only if you invest in an LLC. I didn't say S corps because an IRA can't buy an S corp. If an IRA buys S corp stock, it revokes the S corp election and it becomes a C corp. So it's not an IRS prohibited transaction rule; it's an S corp rule. So these are the 3 ways to trigger UBIT. If you don't trigger UBIT, all the money generated in your IRA or Roth will be tax free. Okay, and that's why I'm here talking to you. And that's why I am 100% focused on educating people on the tax advantages of using an IRA or 401k or Roth IRA or Roth 401k to invest because of compounded returns, tax deferral. Your money grows faster in a tax deferred, tax-free retirement account. Assuming an 8% rate of return, your money will double every 8 years. Why? Simply, it's not subject to tax, right? Think about it. You make $100 every year. Instead of paying 20% tax, being left with 80, pay zero. And you have 100, and it keeps compounding, compounding, compounding. That's why Albert Einstein said compounded returns is the eighth wonder of the world. And the IRA, Roth IRA, and life insurance are the best vehicles to take advantage of compounded returns. Okay, how we're different. You guys know, I think we're the best at what we do. Yeah, obviously not objective, but we got $3 billion in assets. And again, I think what separates us is we're not just going to like set up your IRA and kick you to the curb and say, just pay us your fee. No, we're going to help you design it. We're going to help you record keep it. We're going to help you administer it. And we're going to be there for you for the consulting. And I think that is something that people don't appreciate is at least 30 times a week. I get calls from people. They find me somehow. I watch my videos, read my blogs, podcasts. They're like, Adam, I used one of your competitors and they're fine. I got no issue. But here's the problem. I have a question now. UBIT, conversion, whatever, privilege transaction. They tell me, sorry, go talk to your lawyer, your tax advisor. So now what do? I can't find anyone who's going to answer my question for less than $1,000. What the hell do I do? And I said, hey, if you watch my videos, I told you, you should have chose us. Because guess what? We offer an annual VIP tax consulting service where you have access to us. You have research, we'll do it. You have tax returns that need filed for your IRA, we'll do them. 990Ts, 1065s, 1099s. You need help designing a structure, minimizing UBIT, we'll help you do it. That's what we do. We'll never turn you away. We will find an answer for you. We also have an audit security blanket where if your IRA does get audited, even though I've had one client IRA audited in 14 years, this happened all the way back, literally my first year in business, 2009 or 10, 2010. And this guy was a doctor in Long Island. I'll never forget it because it's the only time I was like, I think I was in business less than 8 months. I was like, oh my God, I guess I'm going to be having to deal with this a lot. And this guy just got spot checked. He was over 72. So it was actually at that point, it was 70 and a half for RMDs. And they just wanted to make sure the value of his IRA was correct. It was like, we actually went on a call. It was 20 minutes, nothing. But this stuff doesn't get audited, but if it does, we'll be there with you and help you through that process. That's how confident we are in our structures and our abilities to help you and guide you correctly through the process. So that's me. I hope you guys enjoy the video. Let me do a couple questions. Okay, the PowerPoint are in the notes. So if you want to check it out, feel free to do it. Will we get to fees? Okay, yeah, I'll get to fees. I mean, we have a flat $460 fee to set up the self-directed IRA, the self-directed Roth IRA, HSAs, Coverdales. We're offering, there's always, promotions and stuff. So give us a call. If you want the IRA LLC or the Roth LLC, we have a one-time setup fee of $9.99. That includes the state filing fee, the operating agreement, and the tax ID number. So trust me, we ain't making that much money on that. Like Texas is a $300 or $320 filing fee. So you minus that, the cost for us to do the operating agreement, the tax ID number, walk you through everything, give you VIP glove service, white glove service. Like we're basically breaking even on that. We have flat fees, which is super important, Barry, because as your IRA goes up, and I've done a lot of videos on this recently because there's a lot of people, a lot of competitors in the space that are charging asset valuation fees, which is not fair, right? Because the S&P 500 has averaged a 10% rate of return over the last 100 years. So if you start with 100K, in 8 years, you're going to have probably 200K. That means these custodians are going to be charging you more every year for doing nothing, right? They are not providing you investment advice or investment service. This is called what? A self-directed account, meaning you're self-directing it. Whether you buy Bitcoin or gold or credit fund A or real estate fund or hedge fund, that's on you. Why should you pay me more because you're smarter than me or a wise investor? It's crazy. So we don't do that. Our fees are flat. In fact, we have no transaction fees. The 460 is the same 460 if you do one deal or 500 deals in your IRA. We don't have separate asset purchase fees. So your one IRA can hold 15 investments. Yes, that's how nice we are. We have no wire fees. Go find another institution that's not going to charge you a wire fee. Zero. No transaction fees. No check fees. No research fees, right? No conversion fees. But more importantly, the no asset valuation fees. So, Bitcoin's a great example, right? Bitcoin's gone up. It's at like 62K now. A year ago, it was at 18, 20K. And for our crypto IRA account, we actually charge $100. It's not even 460. Crypto IRA is $100. And if you hold, there's no asset valuation fee. So it's $100. There's a 1% trading fee, record keeping fee. We use Bitstamp. That's the trading exchange we use. It's, I think, the 8th biggest in the world. But if you just hodl, you're going to pay us $100 a year. That's it. Whether Bitcoin goes to 100,000 or a million, it's still $100 a year. You're not getting a better deal in the country. Even if you buy a ETF, you're going to pay 1%. Okay, so it's the best deal out there. And again, I think that's why we're successful. We give great service. There's no one that knows this stuff better. I mean, literally, I've written 8 books. I will debate anyone in the country on self-directed retirement accounts. Being a tax lawyer, I have a master's in tax law. I've worked with some of the largest law firms in the world. I'm not the smartest guy in the world on anything else, but this stuff I am. So hopefully I can educate you guys. Hopefully you become smarter and better and richer because of the content. And that's ultimately what I want. And that's why we have flat fees. Because guess what? I want everyone to have $1 million plus in the IRA. And I don't want to charge you more for your success. Another question. Can net profits from rental income be used to prepay principal and non-recourse funding? Absolutely, Jay. Any extra money left over, assuming your lender allows you to prepay on that, go for it. You can do it. Reduce the UBTI tax by taking the extra cash, paying off the loan. Absolutely. Thank you, L. Great video. Thanks. Great direct registration. GME direct registration. Yeah, we do a GME direct registration. If you want to, if you own GME and you're worried that brokers out there are shorting and lending out your shares because they have shorters out there, you can direct register through us, through an IRA LLC structure, and we'll use computer share, and you'll be able to hold those shares in the LLC so no broker can short them. Only you'll have control over those shares. We've helped, hundreds, if not thousands over the years. GME, AMC, different stockholders and different companies that just want to direct register. They want to control their shares, right? It's absolutely crazy that brokers could short your stock without you knowing it and actually get a fee. I don't know how the SEC allows that, or FINRA. It seems super unethical, but that's it. Because these broker firms actually hold these shares in their name for your benefit, but it's in their name. So they can do actually whatever the hell they want. So by direct registering, you can do that. I missed your annual fee. Yeah, it's $460 flat. We actually offer an annual compliance VIP white glove service. It's $299, and that gives you access to all our tax professionals, even me if you want it. Access to our books, tax filing services, 1065, 1099. What else? Everything else. We do BOI registration. We do it all. Whatever you need, we will help you do with your IRA. We can't guarantee how much you'll make. I wish we could. But we'll do everything else to get you set up quickly, help you administer, record keep, and keep you in good standing, along with our audit support and guarantee, which Investopedia says we have the best in the country. So that's it. I hope you guys enjoyed today's video. It's probably long. Yeah, it went off a little bit longer than I expected, but it's a lot of fun. Can you blame me? Check out next week. So I'm going to do backdoor Roths and conversions. So looking forward to doing that next week, probably same time, Thursday, 1 p.m., assuming my schedule doesn't get crazy. If anyone has idea topics, I did a YouTube Live as well yesterday. I'm trying to actually do 2 YouTube Lives a week because I'm having so much damn fun with it. And I've gotten a lot of great feedback saying, can you do more of this stuff, Adam? We love when you go live and just talk about a topic. It's just fun. It's not scripted, and we can ask questions. So that's what I'm going to do. Adios. That's it for today. Definitely check out our channel. There's tons of great videos and feeds from our podcasts. I do 3 podcasts a week. I'm going to do about 2 lives a week. And also check out our website because there's some really cool blogs. Just did one on different entity types for setting up a solo K. Also one on crypto cold wallets. So definitely check out our website. We also just announced, I should have said this up front. We just announced in a press release, because we are the first self-directed IRA company that has an AI tool. Yeah, we're that cool. And if you go on our website, it's on our homepage, it's also on some subpages, you can play around and the AI technology will tell you what best structure. Actually, I'm going to do that on a YouTube live next week. It's going to tell you what your best structure is. So you're going to answer some questions, and it's going to tell you, you need to do an IRA, you need to do it in a self-directed LLC, a solo K, a ROBS. It's awesome. I've been working on that, and we did some like machine learning, and we went live with it yesterday. It's really, really cool little AI tool, which I'm super excited about. Really fun. So that was a fun process to get that done. That's it. Sorry I talked too much, and I hope you guys learned a little bit and didn't put anyone to sleep. Otherwise, see everyone again soon. Thanks again for spending some valuable time with me. Really, really, really appreciate it. Thank you.